Hello, welcome to today's silver analysis. It is the 30th of November 2010. One more month left in this calendar year. Therefore, this candle, this final monthly candle of November, is now set. Silver closing the day roughly at around $28 per ounce. And now it's looking as if maybe this market is starting to look overextended. Keyword is starting to be up too much. Just because something looks like it is up too much doesn't mean that it cannot proceed towards the upside. There was this interesting pattern that it took place, a ascending triangle, and it obviously over the last few months has been taken out towards the upside. And I think that there's good reason why December could have yet another green candle higher. If we take a look at this on the 15-minute line chart, it has gotten above this significant resistance here, roughly 27 and 3/4, 27 and 4/5, even the 28 even number. And it broke that resistance today. I was mentioning yesterday that we had a symmetrical triangle. Often these things break out within the path of least resistance, and the path of least resistance is higher. It has broken out towards the upside. And before, people were trying to say that the market's going to explode. It looks like it's going to keep going lower. And they had good reason for it because, well, it looked like there was an inverted cup and handle formation forming. Now, the problem with saying this is we're in an uptrend, and it was still a long ways away from going to 25, which is the neckline. And you just have to sometimes let the markets correct themselves through, and this has been a time consolidation period. Now what we can see is that we have built in this inverted head and shoulders pattern. This area being the left shoulder, this being the head, and then the right shoulder in here. This is a bullish formation with the neckline of 25 and a resistance level of roughly 27 and 3/4, then one can say that gives us a price objective for a gain of 2 and 3/4, which would get us north of the 30 handle. And the Fibonacci from this level to this level gives us a price objective to 29 and 2/3. I was stating yesterday also that it was a battle between this 5-day moving average and this 10. It obviously has gotten above the 5. I would like to see that level become support at some point. It doesn't have to be support tomorrow or on Thursday, as it is now finding good support at this trend line as well as this previous resistance level as well. But at some point, I would like to see the 5-day B support somewhat soon. Now, what's nice about this hold here is that it's about a 1/3 Fibonacci from this low to this high. So that's a successful retracement. But I was also mentioning the 26 and 2/3 and 27 and 2/3 level, because from this high and this low, the Fibonacci levels, the 38.2 was 26 and 2/3, and the 61.8 was 27 and 2/3. So when you bounce up to the Fibonacci, the 61.8, come back down to the 38.2, that means that the odds favor you take this level out. It has done so, and it is showing a lot of bullish tendencies. Now, as far as currencies are concerned, the US dollar is rising right now, and yet silver is still rising. This tells us that it is the metals going up, not just based on currencies. After all, when the market was up towards this 29 1/3 level, priced in Canadian dollars, silver was 29 1/3 Canadian because the dollar was par at that point. Well, now it is about a 2.5% difference, which means you can add about 70 cents or so to the spot price. Silver in Canadian dollars is roughly at about 28 and 3/4. Now, as far as the Australian dollar is concerned, when this high occurred, the Australian dollar was 2% better than the American dollar. Thus, silver was trading below 29 Australian dollars per ounce. And the Australian dollar has been falling big time against the US recently, that it is now about 95 cents or about 5% higher, which means that silver is at all-time, or at least at nominal highs for the last 30 years in the silver market in Australian dollars. I think the same is true within the euro and the pound. It's going up in all currencies. And the final chart that I want to go over is this price memory chart. I brought this up a few weeks ago, and this is for the rally from August the 23rd to where we are. This is how often silver trades within these prices on a 15-minute time frame using the US closes. So there has been under 120 times that silver closed within the 2750 gap, give or take around a quarter. And what's interesting about this is if you look at the size of these two candles in comparison with these, it's showing you how successful the Fibonacci has held at the 26 2/3 level. Because the 26 2/3 level, this is 27. So that's give or take 26.75 to 27 1/4. And because it's held this level, it does look as if it's ready to test these levels here within the 28 and higher. So we'll see how much more juice that the silver market has. And I know that's got a lot because very soon I'll be making one of these videos stating, you know what, silver's going to 100 per ounce very, very soon. It's a conservative level. And I'll put that out somewhat soon, probably by the end of the year, because the biggest charts for me to determine that the market's going to be going into triple digits by 2011 or early 2012 is because of the yearly and quarterly silver charts showing a lot of upside potential. So most of the people watching this video are already familiar with the reasons why to get into silver, and I would not be surprised if it makes it up towards this 29 level before the end of the year and makes new highs. And just one more quick tidbit of information here. This trend line, I drew this trend line in the month of September. Late September, we'll see. I can't remember exactly when. Middle of September. And what's interesting is that it keeps on going higher. The computer tells me, it draws it in for me based on the numbers that I've calculated. And if you look at this chart, the early date is October 29th, so it's pretty much a 1-month chart, plus a couple days gravy, I guess. And this chart, or this line, started below 25 and is currently now at 28. So that's a gain of over $3 on 25. That's a gain of over 10%. This rally has been over 10% per month. It's been sticking with this trend line the entire time, bouncing above and below it, which is perfectly fine for me. So therefore, by year end 2010, it's going to be going up yet another 10% by the end of the calendar year. From 28, 10% is 280, which would thus get us towards the 31.5, 32 level that this trend line will be staying within. And at the same point, the big moves to the 100 or the 200 or 300 per ounce, in order for us to have those gains, it has to accelerate from this trend line and create even a steeper upwards line. So we'll keep our eyes on that, but for now it is looking very bullish from many different time frames. Take care, everyone. Now, before I go, I want to quickly talk about the Australian chart, because I was mentioning how it had a big move lower. And I wasn't really looking too much at these other moves here. So even though it is about a 7% lower, it's still well above this previous resistance in here. And the Fibonacci for the low of 807 and the high of 1018, really we gotta look at the 76.4 and the 61.8. That gets us at 96.5 and 93.5. So the 96.5 looks to be violated. So most likely it could come down towards here, even some more. The just in case anyone was interested within the chart, you can also see that if you just connect these trend lines, it's broke barely. So thank you for watching. Bye bye.